Welcome back, everybody. This is another instructional video courtesy of the Blackfire Technical Analysis YouTube channel. Welcome, everybody, and today we are going to cover a little bit more in depth the 21 exponential moving average strategy. The first video that I put out was a little bit of an uneducated version, basically me just covering it a little bit after learning what it was, and now that I've switched up my strategies and I have been trading the 21 exponential moving average strategy for a little bit of time now, I have a more nuanced understanding of what it is to trade this strategy. So I want to cover a lot more. I'm basically going to start from scratch. I'm going to tell you what the moving average strategy is, how to implement it, how to use horizontal support and resistance with this strategy, how to use RSI with this strategy, and how to use stochastics with this strategy. So this strategy, in my opinion, is extremely simple. It's so simple, it's almost scary. It's almost like one of those too good to be true strategies here. But again, if you employ the right technique and the right strategy while using this, you can mitigate your risk. Because again, the strategy is not 100% guaranteed to work every single time. But in those setups that do end up working, very, 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 very powerful. Obviously, I'm going to show you examples of where it does work and where it doesn't work, and I'll tell you the reasons why they worked and why they didn't work. From a technical standpoint, from an analytical standpoint, not from news or hype or anything like that. All of the information is going to be related to the technicals. So I want to get real down and dirty with this indicator and with the strategy, and I want to give you guys all the meat and potatoes, obviously for free of charge. This doesn't cost a dime. Use this to your benefit if you so choose to do so. And before I begin, I want to remind everybody that this is entertainment and educational purposes only. I'm not a financial advisor. I will never tell you what to do with your trades or investments ever. While I encourage people to try out this strategy, I also encourage you to conduct your own research, your own due diligence, and your own analysis prior to making any trading or investment decisions. Again, this is a community where we come together, study together, and try to make money together. So I want to invite everybody to have that understanding before making a decision. If you do make a decision off of my videos, you do decide to employ strategies that I use, do them at your own risk, especially you guys that have way less experience, right? And that's not a roast. That's just telling you that experience is key in this game, and I do have a little bit of experience in this market. So take it with a grain of salt. Do your own research, conduct your own due diligence, make sure you're plotting your own points, your own analysis, so on and so forth before making any trades or investments. So without further ado, we're going to go ahead, hop right into here. What is the 21 exponential moving average strategy? It's a strategy, right? How do we do it? First off, we're just going to look at price action. And what we need to do is find our indicators, right? And type in EMAs. You can do triple EMA. You can do any of these EMAs, right? I happen to have Caretaker's EMA, which you can also find with CTMAC. Oh, come on. It's CTMAC. I know it's CTMAC. It says it right here. CTMAC. Indicators. CT space MAC. There we go. Type in CTMAC. It is a free indicator on TradingView. I like this one because there are a lot of different customizations and stuff that you can do with these moving averages. And they're just awesome. I absolutely love this indicator. So once you do that, you're gonna click it, and then boom, you got your moving averages here. You come up to this section here, you hit this the settings button. You have your style here, right, for your exponential moving averages here. I like to use yellow for the 21 exponential. I'm a visual creature, but you come to inputs and then turn off all your other moving averages. Type in 21 for this length for EMA 5. Make sure it's set to EMA because you can change between SMA and EMA, and then there you go. Type in 21, make it yellow, make sure it's EMA, and you got yourself a 21 exponential moving average. Okay, so what are we looking for here? As far as price action is concerned, what we are looking for is for price action to first break above. This is warning shot number one for a potential long position. Warning shot number 1 is fired. You have your break above the 21 exponential. You see that the break has forced the exponential to a positive slope. Confirmation is the key for this strategy, okay? We're looking for confirmation. What is confirmation? A secondary candle closure with either a back test or just straight continuation further above. As long as the second candle closure remains above the 21 exponential, you have yourself confirmation. You enter. And then you don't sell. If you decide to use this one blindly, which you can definitely use this indicator blindly without horizontals, without RSI, without stochastics. You can definitely use this blindly and still turn a profit. And then you're not looking to sell until price action breaks below the 21 exponential, and then a secondary open and closure is confirmed below the exponential, or a back test touches the 21 and then rejects to confirm it as new tentative resistance, right? So I'll give you guys an example of that on Bitcoin. I'll go through a couple of different assets here to show the validity and the strength and the sheer power of this strategy here. So we have an example, right? Let's go for a clean example. Let's find one. Let's find a clean example. All right, here's a clean example right here, right before coronavirus dump times, right? So here you go. Gonna zoom in. Boom. Here's your break, right? And you see that the break forces that exponential to a positive slope. We'll go ahead and we'll zoom in even more, right? Here's your break on the 2nd of January, 2020. Boom. Here's your break. And then what do you get? You get a reversal style candlestick, confirming it as support. Boom, boom, boom. Continuation. Cookie cutter is that. You don't exit this position. You enter here on the 3rd of January, 2020, and you don't let you don't let your own brain psych you out of the position. You know, as long as price action remains above the 21 exponential without a confirmation closure below it, you stay in that position. You stay long, okay? And we'll show you the results. Well, first, we got our example of when to enter, right? When to enter and how to enter. Where do we exit? So we actually exit right here. Here's your warning shot fired, right? Boom. There's your warning shot fired. We got a candlestick closure below. And then we get a back test to confirm it as new tentative resistance. You get out right here. Now, obviously, this region didn't work, but this here, printing a new low, right? Using it in conjunction with other indicators, we got price action, breaking structure, right? We put in a top here, saw continuation to the downside, saw a lower high with a break of the 21 exponential, and then a back test right here on the 19th of February, rejecting that 21 exponential. You get out right here. Let's look at the percentage of that. So you enter here, and you exit here. You're looking at 30% profit right there. That's a pretty damn good trade. Now let's talk about the short side, right? Here we get a perfect example of when to short. So we get this little bit of a fake out, confirm a lower high, and then boom, we get our first warning shot. Warning shot fired, warning shot fired, warning shot fired. Break below the 21 exponential, followed by continuation. This one actually opened on the 21 exponential as the exponential was forced into the candle, and then we just straight continued to this region here. This is your entry point, okay? And you don't exit. Again, this is coronavirus dump times. And you don't exit until here. Let's look at the price. Let's look at the percentage here. Boom, 29.93%. Hell of a trade. Hell of a move. Okay. Now, obviously, we can implement more indicators, horizontal support and resistances, to maximize the profits on this strategy. But this is just trading it blindly, right? This is just trading it blindly. Let me give you guys some examples of where it doesn't work. Okay. let's see if, yep. Here's a good example, right? Here's a good example. Now, while this technically works, still not really. If you were trading this indicator without horizontal support and resistance, without RSI, without stochastics, without any other pieces of information or parts giving you evidence, this is kind of one of the areas trading it blindly where it wouldn't work, right? So we got our flash, boom, right down below, and then we get confirmation. Okay, we enter here. We enter here, and we get out here on a short position. You lost 4%. That's why adding other indicators is very crucial, especially horizontal support and resistance. Because if you look at the overall structure of this formation, this is technically a higher low before continuing on to new all-time highs for Bitcoin. Here's another example of where this doesn't work. Again, without other indicators, right? Without other indicators, this is another example where it doesn't work. We got our break, and then we got our confirmation closure to confirm the 21 as new tentative resistance. Let's take a look at how much we made. We didn't. We actually got out at a 5% loss. Okay, and that's without taking profits or anything like that. Again, trading it blindly, that's where it doesn't work. Here's another example. You get your open, you get your crash below, you get your closure below, and then you get a secondary open and closure right here below. Boom, and then boom, straight back up above. This is another example without other indicators, without taking profit zones. This is another region where it wouldn't work. Here is a good example of where it would work. Get your boom, your crash below, your close below the 21 exponential, followed by your confirmation open and closure. You enter right here, and where do you get out? Excuse me, this doesn't work, right? This is where it works. Here's your closure below, nice little fake out candle. And then boom, there's your confirmation. You enter here. And this is actually what I did, but instead of using the 21, I used the Cyan 89 to trade this one here. But you enter here, and you won't get out until this recent bull move, right? Nice 32% move. Again, so employing other indicators adds to the strength. Again, if you know how to use those other indicators, it adds to the strength. So I'm going to go ahead and do that now. Let's go ahead and talk about horizontal support and resistance, right? Let's go ahead and add some of those regions. All right, so this is kind of how I employ this strategy, right? When I do this strategy, I always enter it almost blindly, especially if I have a lot of points of evidence that tells me, hey, this is probably a good signal, right? You identify your edge, you take the edge. That's just the psychological. That's the psychology behind trading. You identify an edge, you take the edge. So let's see. Let's go to the past, all right? Let's go to the past. Let's look at some price action from the past. So we have a lot of historical relevance here, right? We have a lot of historical relevance. Or do this with you guys. Okay, so let's take a short, for example. Okay, you come up, you see price action coming up. You're identifying levels of significance along the way, right? You're identifying levels of significance along the way. We know that Bitcoin is in a bullish uptrend. We know that we're in a 21 exponential trade right now. A little bit of a fake out, right? High or low. So say you enter here, all right, first and foremost, right? You already know that the 49.58 region is tentative resistance, right? So you enter on this candlestick here, right? You get your break above the 21, you enter on this candlestick here, you already have a take profit level. You already have a take profit level from a prior resistance level. So as you see price action continue onwards and upwards, boom, take profit. Then you see price action break this resistance, print new all-time highs, back test the yellow 21 exponential, which is almost perfectly aligned with the new tentative support that has been confirmed. That's an add. That's where I would add to the position, right? We took profit, and now we're adding to the position at a much lower price. If you have a limit order, slightly above the 21 exponential here, we can see that it did just wick, right? It just wicked and then recovered off the 21. But if you had a position, a limit order set right here, which is why I always set my limit orders slightly above or slightly below a horizontal. In this case, I would have put it slightly above, maybe at 51.25, just slightly above, right? Slightly above the 21 exponential, because it's not guaranteed to always pull and completely touch it, right? Close enough is close enough. So I would have put my position here, a limit order at 51.50. And I would have just waited just in case. Alongside of that, we have new resistance. We also have a new resistance level. So we enter here, take profit here. There's your resistance, right? And then you can do another re-entry on the 21 exponential and then be patient. And when you do that, you're not closing the entire position, right? Say you take 25% of your asset, right? Say you take 25% of your money that is in your trading account, open a position on Bitcoin. You're closing 25% of that when you take profit. You're not closing the whole position to take profit. You're closing only 25% of that. You're letting the rest of the position ride out until you get an actual signal that tells you to get the fuck out. You're letting your position ride out, and you take profit along the way, right? So you got, you're seeing resistances formulate as price action moves onwards and upwards, right? Clear indicated resistance here, easily a take profit level. And then you see price action break above it after you added on this 21. Now you're looking at a stronger position, right? You're looking at a stronger position that you nurtured. You took profit, and then you put that profit back in. So you technically have a larger position when you add in, right? And then boom, we formulate another resistance. So we know if we back test and try to go for the 21 again, next time we move towards that resistance, you can take profit here. Then you get a little bit of a fake out, right? You get a little bit of a false signal. However, in the context of the market, we know it's a bullish market, right? And we didn't see new lows print here. So this could have been another buying opportunity, especially seeing the reaction off of this. Yes, again, this is another example of where the 21 exponential moving average strategy wouldn't work. If you closed this position here without understanding the general direction of the market, seeing that price action didn't indeed print a new low, you would have missed out on this entire move. But if you held strong psychologically, realized, hey, this is a higher low, maybe I shouldn't close the position just yet, boom. Now you hit your take profit zone again, and you continue onwards and upwards. Continue onwards and upwards. Formulate a new resistance. This region here is resistance. Formulate a new resistance. That could be another take profit zone. You hit this and then rejected it. So next time you come back up and test it, you can easily take profit and wait for the move to come down, confirm an exit, or come back up and confirm continuation, right? So using horizontal support and resistance is very, 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 very crucial as far as price action is concerned, especially using past price action for points of relevance here. The way I'm moving my position right now, I'm using this structure to identify take profit zones, and the next take profit zone I have for this one is boom, right here. right around the $49,000 region. If you're watching the live streams, you know that that's my next take profit zone. That's kind of where I'm, setting my position up for a take profit, because I can use prior lows here, and I know that these prior lows are major points of relevance in Bitcoin's history. I'm going to use those regions to take profit, right? Now let's add in other indicators. So here we go with the RSI, right? So we're going to use this current price action as the main example. How long is this video right now? 20 minutes. Okay, 5 more minutes. I'm going to try to get this done in 5 minutes. So we got our candle to break. What is the RSI telling us? The RSI tells us, let's expand it. On that break, the RSI had confirmed the exponential as new tentative support. That's a warning shot. It's saying, hey, we might have something. And then we get confirmation with this candlestick. And right here, we're seeing RSI take out all these prior highs here. We see RSI printing new highs. That is your confirmation signal number 2. Confirmation signal number 1 is the confirmed closure above the 21. A secondary open and closure above the 21 is signal 1. RSI printing new highs is signal 2. Stochastics gaining momentum is signal 3. Stochastics is a little bit more of a laggard. Obviously, looking at this, I do believe the 35 read was your signal on that confirmation candle. Yeah, that's pretty. You see stochastics here break out of the the bearish control zone. You got 3 points of evidence, right? Stochastics breaks above the 35, right? After bouncing off of this critical zone, breaks above the 35, while RSI prints new highs, while price action confirms a secondary candle open and closure above the 21. You have 3 points. You have 3 edges identified, all lining up at the same time. Enter, and then you hold strong. Manage your position, manage your risk. Brian, how would you manage your risk on this strategy? Well, I'll fucking tell you. I will tell you now. I'm gonna hide the horizontal support and resistance. So we have our three points of confluence. We have our 3 pieces of evidence that tells us that we have a legitimate identified edge that tells us to go long. Okay, we have that. How do I mitigate my risk? Easy. We zoom in. Now, I like to be real precise, right? And obviously, you want to buy as close to the 21 as possible. Obviously, in this case here, not really a close test of the 21. Unless you were playing it a little more aggressive. Again, I'm a conservative trader, so I always wait for a secondary confirmation before I am convinced that the move is legitimate, right? So we have this candlestick here. I would have entered here, and in this instance, unfortunately, this would have been an instance where my risk management would have been a little bit bigger than I've desired. But I always go on the 21. Always go on the 21 here, and I go 2% down. Boom. This is my risk management point. Right here. Now, obviously, not a great entry, right? And that's why sometimes playing conservatively can get you in trouble. It's technically a 5.5% risk that you're taking. If you entered, upon the closure here of Bitcoin, and maybe you could have, waited on this, down wick here, which would have been a pretty decent idea. And that mitigates your risk a little less. It takes it all the way down to 4%, right? But I'm always going off the 21. Wherever the 21 is where I'm mitigating risk. And as that 21 goes up, every single closure, I adjust my risk. Every single closure, I adjust my risk. And if the 21 moving average strategy is playing in your favor and you end up opening a position that has 4% risk and you're not comfortable with it, but you're taking the edge because of your trading rules, wait for that 21 to go up and then adjust. As soon as the candle closes, adjust your risk. This whole position all the way through, I've been adjusting my stop loss here as price action continues on. Now, obviously, I like to be a little more precise, so I have to make my exponential all stretched out here, right? Stretch it all out. get my little thingy here, and then go 2%. I want exactly 2%. And this is where my stop loss is right now for this position. Right now, currently, as it stands, my position is stop loss in profit. So now I know I'm in a risk-free opportunity. I know that if Bitcoin decides to dump right now and it triggers my stop loss, I know for a fact I'm going to get out in profit because I have a limit order at a stop loss set right there. So that's kind of how I would mitigate risk. I always try to not take more than 2% of a loss at the very beginning, but sometimes, especially if you can't time an entry, perfectly, sometimes, you're forced to take a little bit more of a risk, more risk on a position, just because you didn't get that, that desired entry point right on the 21. Sometimes it doesn't happen. But that's why you use other indicators to identify whether the market agrees with the move or not. And in this case, with such a violent break above, enter. I entered. Again, not financial advice. I'm not a financial advisor, but from my perspective, that's what I would do with this moving average strategy here. I hope that answers a whole plethora of questions. If you guys have any kind of questions at any given point for the 21 exponential moving average strategy, that is my main strategy at the current moment in time. Hit me up with any of your questions in the Blackfire Technical Analysis Facebook group chat or the Facebook page, or shoot me a comment. I do read the comments. I'm not getting very much of them, so when I do get a comment, I do respond to them. Send me a comment, hit me a comment, send me a message, anything like that. If you guys enjoyed this video, if this video was helpful, hit that like button, hit that subscribe button, tick that little bell, spread the word. Let's try to get this channel to 1,000 members. It would be phenomenal to have open discussions on technical analysis on the daily with a vast array of individuals of different ethnicities and backgrounds. That would be phenomenal. Bring all the people together. So hit that like button, hit that subscribe button, tick that little bell. Thank you for being here. Thank you for watching. I hope this helps you guys understand this strategy a little bit more. And again, I'm still getting better with this strategy, so there might be even another 21 moving average strategy coming in the future. The more I learn, the more I'm going to want to update you guys. So that's going to wrap it up for me. Thanks for watching, everybody, and until next time, stay safe, stay happy, and stay healthy. Peace.